All right, we talk about ascending triangles, right? When you got ascending blue triangles, means buyers are kind of defending higher and higher areas. What you look for is the first moment that they reach a blue triangle on the upside. Could be either a top or a temporary top. While this happens, you can see these triangles going up, up, not really breached. First time it happens is right there. Now, it's a temporary bottom, but a new one comes in and starts building a new ascending triangles. So this does get breached. It's the first triangle in this move up. So we do go down a few points. A new one comes in. Two new ones come in. Two more new ones come in. And we start building this new ascending triangle, right? And they go up, up. First one to get breached would be right here after this sequence, right? And it becomes a top and a temporary top, and then a more notable top right, right in here. The point is, when you're in the real time, we can't ever say, nor should we, that the highs are in when you're at that high, or this is going to be a swing high and we're going to break 10 points before they ever revisit this high. At the time, you should never be 100% certain that that's going to be the case. And you don't want to predict too far out, like we're going to break 10 points from here. That's trying to predict the weather in 2 weeks. So just stay within, like, hey, there's a probability that the high is going to be in. Be careful getting long. You could be reaching. Think of exiting your long if you are long from below and taking profit, because not only is this the first breach of an ascending triangle, but you're getting some aggressive sell imbalances. Remember, this is such an important tool because it's not what people do, it's what they want to do. These triangles are what people want to do and an imbalance of what people want to do. It's not people who sold it yet, but people who want to sell it. They're going to be the ones that are always more important in getting price to go lower. So we get this market to move lower. The first kind of, you could say, descending triangle, there was a gap between those behind there. And this one creates a little bit of a bottom, right? And uses our PWAPs as support. And the market then is kind of uneventful, choppy, sideways, and everything else. And then we get a sequence of, you could say these triangles are ascending, and the first time they're breached, it creates a little, at least, stop of a rally. Um, and then the same thing goes for these triangles when they start to take out the red ones that are, or pink ones rather, that are descending. You're getting a lot of noise in here because it's slow and you're just getting a lot of imbalance because it's choppy and it's slow, and you're getting these imbalances that are keeping the market tight and in a range. And so when we could go and look at example, here's some ascending triangles. This blue one, this one, this one, this one, this one, this one, this one. First one that's reached decently would be this one, right? And it does create a temporary top here. We find these examples all the time, every day. And what it does is it creates a little bit more confidence in predicting a probability. Don't try to predict the exact temperature. Try to predict like an area, or it probably will be a top, and start using that language, because when you start thinking it's going to be a top, this is the high, we're going to break, that's putting too much pressure on yourself. It's not allowing you the ability to bend and be flexible. And if you're not flexible, then you're trading something that is flexible and you're not. Price is flexible to take in new information. You have to be also. And if you're too set on your ideas, you're going to be too stubborn to admit that you're wrong. And what do we talk about trading? Trading is about being good at being wrong.